The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi. Are we good? How are you guys? There were some technical issues this morning. I hope you guys had a good Thanksgiving. I surely did. I'm trying to work off 10 pounds already. Hope you guys are doing good this morning. Well, it's probably all about the dollar, guys. If you hadn't been watching the news reports this morning and reading the papers, the Chinese currency is going to get status and some kind of reserve. Let's see. Let me actually just read this actually to you. The International Monetary Fund is expected to grant China's yuan currency status at an executive board meeting today in a decision that will elevate the renminbi and China's influence in the global economy. The group's benchmark currency basket, also known as special drawing rights, so far only contains the dollar, euro, pound, and yen. While the decision is likely to be announced later today, the yuan will not officially become a reserve currency until September 2016. So what does that mean? Let's take a look at the euro for a second. And I hope you guys are seeing my full screen. Are you seeing the charts on the full screen here? Wow, it's weird. It's not full screen on mine. Let's go into the euro here. To me, this continues to put pressure in some ways on the euro. We've had some new talk of injections of cash, basically supportive measures from the ECB, the yuan getting more status. I mean, what does that ultimately do for the euro? Not good. So as we look at the euro, as we look at the technicals, we're not going to get too deep into the fundamentals here, but as the dollar's sitting right at that number, let me just reference all these before we get into kind of a wrap-up conversation about it. As we look at the euro, as we look at the dollar, we talked about this 128.29 area, unfair highs. This is without question in the scanner. Let me go back to the futures section. Let's look for the dollar. There it is. As you can see, we're showing top in that 129. I'm going to pull up my landscape chart. By the way, we put all of our futures on an entirely separate server now. So if these things don't update, I mean, even in fast markets, you should get no more than 60-second delays on this. There's a level of the market. There's that unfair high sitting at 129. Is this a resting point? We talked about this last week and the week before. We get up to 100.29. You want to see these things come off, just like the S&P action around those daily unfair highs. We'll show that in a second. This is not the type of action you want to see if you want to be short around this area. You want to see prices get away from these major inflection points. This is a weekly unfair high. So as we look at the dollar, we reached our goal. We talked about taking some weight off around then. But as this thing, if it consolidates and spins around here this week, we could easily head higher. Here's the daily situation. There's that last supportive area, 99.67. This is on the U.S. dollar. So let's go back to what we talked about at the beginning of the show, which was the yuan getting some kind of status, possibly in a decision being made about that particular currency being in the basket of reserve situations. Let's pull the this is the Chinese yuan versus the dollar. A little bit of elevation there on that news, but what does this ultimately do to the rest of the currencies? For the euro, I don't think anything helps this. Fundamentally speaking, they've got a lot of problems over there, as evidenced by what the ECB is saying now. They're going to continue to, do the same trick we pulled in our country for a while with the rates, the cash injections, for lack of a better way of putting on the printing presses for this particular currency. And we talked about par value for this ultimately with the dollar. I still fully believe that's going to happen. Do you short this now? Let's look at the 240s and let's give some levels. You got some resistance, which you've already used once, around 1.0602 rounded off. Short-termers can use stops around there. Dailies, you have no new profiles attempting to appear. We kind of got through a lot of these magenta bars on the daily on the navigator and haven't actually, and now we've got another red bar, which means that we're probably going to have a continuation in the euro headed south. I don't see any reasons to buy this. There's a lot of reasons to sell it. Here's the weekly on the euro. And as the euro, God, when it was trading 130, 135, the days of the euro, in my opinion, are over. This thing is more than likely going to head south below par. But as the world starts looking at other currencies to take some of the show away from the classical heavyweights, the euro, the yen. I mean, look at the yen. I mean, you talk about devaluation. This has been the trade we've been talking about for a long time. You've got this 122.55 to lean on. This, as the yen goes up, this is a devaluation chart. I mean, if we go higher, the yen's becoming more and more devalued. As the euro goes lower, that's the devaluation of the euro. These are a little switch because we've got the USD, JPY, and then the JPY USD. So the JPY USD is, as it goes higher, is a devaluation of that currency, just like the euro headed lower, just like I said. So as the Chinese currency becomes more and more possible of having some kind of, prevalence in the world as far as the possibility of becoming a reserve currency, a lot of these are going to just not be the currency du jour anymore. So that's what I look at when I see the news about the Chinese yuan. If you go over to China, it's completely scary about how, they talk about pullbacks in that economy. You go to Shanghai and Beijing. I mean, Beijing has, you should go over there sometime. You can't get the full impact without actually seeing what's going on there. Let's take a look at the 10-year. Okay, this is something we've been paying attention to. We talked about targets up top. Right now, 127.06.07. Weekly unfair highs around there. We talked about that up into 127.19. So let me just restate this. Hold on. So we've reached our targets now, 127.07 on the 10-year. We're looking at a little bit of a resistance here. So, again, buying opportunities, 126.17. Let me check something really quick. And that was the area we gravitated above and used it as support last week, 126.17. So, again, we could revisit that. Right now on the 10-year, you've got a little bit of a lid, 127.07. Check the if you're looking at the scanner, I just want to make a note. These are in decimal form. It's very hard to switch. Everything else in the globe is based on decimals, it seems like, except the 10-year and the 30-year. So just want to state that, we can make an exception. We can put fractions in here. It's going to take a lot of work. So the 10-year, as you go across the cells, you're going to see decimal forms, and you'll have to actually look at that. If you want to convert it into fractions, I'll give you, on the break, I'll give you a relational way to do that in case you haven't figured it out already. So as you look at the 30-year and the 10-year, those are in decimal forms, and on the charts, you'll usually see them in fractions. All right. Let's take a look at the S&Ps. We talked about this last week. Here's our scanner. We're going to go into our dashboard, and it's going to default populating our S&P breadth situation here. That's been relatively cohesive between the daily and the weekly for a while now. Again, and the 60 minutes kind of been, as of Friday, was kind of lurching up here and crossing back. Never really, I just want to state this, it, had a little bit of a chance of going below here on the 27th, but has been generally positive. But as we look at the daily, we had our daily crossover again on November 18th. So, what do you do with this thing? We talked about the classical crowd the inflection point situation, just like I think we're probably going to get into with the dollar here. If we consolidate around these inflection points and don't want to come off of these and stay away from them, these are continuation patterns, classically, technically speaking. So do I think the dollar's going to go higher now? I absolutely think the dollar's going to go higher. Make sure you put your stops in on a trade like that. But this is what's going on this morning. Short-term stops below 2079, 2080 now. That's the bottom of our 240 profiles, just like we broke previously last week before Thanksgiving. The bottom was 2082. And we actually got down into what? What was the lows there? 2060, 2065. So short-term guys, use the 240s to regulate the trade up. You've got some support on the daily unfair highs around 2088, 2089 that we have been using. We're going to be right back from break, finish up about the S&Ps, and get to a couple other things.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're looking at the S&Ps. We're up at 2094, 2095 this morning, and we were just finishing up about that. But when you look at this type of action, this crowding on an inflection point, this is not very good. And as we look at the breadth relative to all these inflection points on the index futures, it's just not a, it's not a rosy scenario. You want to see some things starting to break at least the 60 in a low VIX environment, which is kind of what we spun into lately. You're going to have to look and wait for some of these longer term 240s, dailies, weeklies to start showing some weakness. It's just not there. I mean, most of these stocks in the S&P, and I'm going to pull up the dailies here. There's 174 sitting above profiles, 257 within, 64 below. It's almost like everything's on the launching pad again. So if guys who are thinking about shorting this or short, these are, I always think about also the converse. If I'm short, am I really happy about what's going on here? And I'm not. I mean, I'm not short, but as we look at this, you always want to kind of consider, when are people going to have to start covering that are short and wrong? And I feel like that's probably the case right now. The dollar going higher is a devaluation. Everything else, all commodities, and sometimes the U.S. stock market has to kind of reprice itself. But the U.S. stock market is kind of holding up well with that, devaluation in process and all the things that go along with, multinationals having a harder or a higher hill to climb, really. On that note, let's take a look at something that really, this is a company that does a lot of business overseas, Caterpillar. I'm amazed when I go to Asia, like, how many U.S. big equipment type scenarios are over there. This is Caterpillar, all right? 69.39. This is our weekly. I wanted to point this out because this was on the scanner 2 weeks ago. It's coming back into possibly a supportive situation to explore more of the fair auction. We've kind of already done that, but let's just, this is the weekly. We've referenced a lot of things that are possible indications here. Has this thing rallied a little bit lately when the market spiked up? Yes. Can the market go higher? Yes. You've got better longs out there, in my opinion, especially with the dollar situation the way it is. So right now, I had a couple of emails about this because, people, it's always an indication to me almost when people start sending a lot of emails in about a certain thing. Is it time to buy? Is it time to buy? I'll be honest with you. A lot of times that means it's not. But as an indication in itself. But as we look at this, the good news is if you're going to nibble, you've got 69.39 and stops below based on your noise level. I actually think that you need to be thinking about selling breakdowns below 69.39, especially if the market does a little bit of a blow-off session here, the S&Ps, and Caterpillar cannot even get back up into the top of its profile on a long-term 77.40. And that's pretty much coupled with that 76 up here on the daily. In my opinion, if the market does a blow off and this thing actually does rally and you guys are trying to nibble here at 69.39 stops below, that's best case scenario, 76, 77. All right. We've already reached that area 3 weeks ago. What was that high? 75.93. Let's just call it 76. We've already gotten into that area. We kind of hit those daily unfair highs that we're in now. But I'm looking at this as selling breakdowns below 69.39 on weekly closes, believe it or not. Remember Alcoa. God, man. Remember that. I mean, that's not the same situation, but it's an ugly situation that you can kind of reference a lot of similar concepts here technically. So it's selling 76, 77 with stops above. If that happens, market dragging this thing up, I don't think that's going to happen. But selling breakdowns below 69.39. All right, let's talk football. Carolina and Clemson. Sportsbook.com. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I always I always have to laugh. I'm sure you guys get these emails. You get on somebody's email list, and then you get these investment things coming at you like wildfire, and their picks and bull picks and bear picks. I got to tell you, man, I look at this Zach's email. These guys are the flip-floppiest people. I mean, long-term view changes on a weekly basis. And then the stocks that they throw out there, bull and bear picks, I've followed them. I mean, they're utterly ridiculous. I mean, they don't post their their track records at all for doing these picks. It's utterly insane. You can get way off base reading some of these things. So what does that mean? I suggest watching TFNN. How about that? Had a question about the treasuries and the month code. eSignal is, in their continuous contracts, we try to map, the front month contract with what they're putting on, because we use their data feed, and sometimes it handcuffs us a little bit, and sometimes they're not exactly, the best on the rolls here. But I will, RJP, I will look at that, and I've alerted the tech guys already that kind of maintain the scanner, and they're in China. Just kidding. They're actually in the Philippines. It's close to China. But we've got a pretty good handle on that at this stage. We're going to take a look at gold. This got a little ugly last week. I don't have to tell you guys that. And I don't talk about targets a lot. And let's review that. Let me just pull up gold here in the scanner. Let me go to the futures section. And let me get some numbers here. So as I look at gold, and this is mapping pre-market pricing now, especially on all the individual stocks. on all the individual stocks pre-market now. It's updating. So while I'm thinking about this, so if I want to do, let's just go back to my dashboard here. Is the scanner showing full screen? Because I have some technical issues this morning. I want to make sure it's not cut off. Got some resolution, weird things going on here on the server. Let's get this here. Okay. It is showing full screen. Okay, cool. Because my charts are only half screen. It's freaking me out. Thanks, Mark. Thanks, Jay. Thanks, Tucker. So as we look at some of these things, I'm just going to pick one, breakdowns, and I got to make another comment about the scanner. So as we look at these, the breakdown formula, what we're doing here is this. We're actually putting the formula for the breakdown and any other custom sorts right up here in this extra real estate. Somebody was asking about. Oh, let me finish. Yeah, let me finish gold. I will finish gold. I got off in left field here a little bit, but I'll come back to gold in a second. We're putting the, in English, basically what these custom sorts, what so-called formula it is. I'm refining these a little bit more, trying to narrow it down to have less picks, so they're as choice as humanly possible when you go to these custom sorts. We're always willing to add more. But as you look at these custom sorts pre-market, it'll update pre-market now in the weekly and daily. Most of these sorts are focusing on weekly and daily and longer term situations. I mean, we can't have a zillion custom sorts in here. I guess we could, but we'll have to start classifying a lot more. As you look into smaller time frame sorts, you can actually come in here and do those basically in the manual sorting over here on the upper left. Tucker, you didn't have a old person's moment. I've been having an old person's moment all morning. I haven't had enough coffee. You guys tuned in early. You caught me stuttering through talking about China a little bit there, so I apologize. That's the medication is not as strong as it needs to be this morning. So as we go back to gold, let's just go back to gold for a second. All right, so as you can see, that 19 and that down arrow on our 240s, that means we have had 19. I hear you, Tucker. As you look at that number and as you look at that arrow, what we wanted to do is give more insight when instruments are trading within profiles. So by definition and by profiles, we basically said that this has been in a downtrend for 19 straight bars. And that's what that arrow means, and that's what that number means. It doesn't mean we've been in the profile 19 bars. It means we've been in a downtrend relative to profiles for 19 bars. So, you got a little 60-minute green shoot here. And let's look at the so that's what that means. You can see it all there. And we're kind of starting to pop up a little bit here. But you've got resistance again now at 1066, 1067. Let's go back to the chart. And let's just pull up. And, people always say, what's the target? What's the target? A whole number like 1,000, I don't think you can ignore. But we always talk about letting profiles regulate the trade down from the longer term. And what does that mean? So here's the weekly. We had the breakdown. We had the retest of 1086, 1087, 1090. That daily profile that we were looking at. Let me just pull that up. There's the 1090. So we, kind of had a weekly close, go back and retest that 1087, 1090 DMZ was a big deal for resistance. And we always talk about, there's no, if we're looking for targets, we always talk about, let's wait until we see some green shoots, or not green shoots, but peel backs start to happen, just like we're seeing on crude oil right now. All right. That yellow peel back means that we're having a new profile attempting to appear. All right. Let's look at sugar, new profile attempting to appear. If you read that, price has been above the task profile for 10 consecutive bars. However, a new task profile is attempting to appear. That means that it may be time to start looking at that as, okay, we've had our day. We're going to have some new inflection points. In this case, that's going to be some new supply. So as we look at gold, we don't see any of that right now. And we haven't even I look at the long-term view on gold here, and we've been talking about that. I don't see any type of breakage of the 240 as it regulates the trade down. So what does that mean? That means as we've been looking at this in a downtrend, here's gold. My goodness. We had a little bit of a close and breakage above that area right there. That's why we started a new bar count, because by default, that kind of broke the trend, all right, on this, 240 move down. But as you see this now, you've got new resistance to keep turning the wrench the same way at 1066, 1067. And guys who are doubling down on gold right now, you've got some things that are really not in your favor. You don't have any new profiles attempting to appear on the daily. You definitely don't have them on the weekly. And can gold spike up $30 in a day without question? But if that happens, then you've got a little bit of a green shoot on the regulator of the trade down the 240s, which would definitely move through 1066, 1067. And right now, in my opinion, you've got to be willing to sell that area. The trend is down. There's no new profiles attempting to appear on the long term. And you've got another resistance area now provided even lower. So I don't know if that's what you want to hear. Who was talking about? We had an old person, Tucker. But I'm laughing at something at the end. I'm not laughing about gold. All right, so that's the situation on gold. Silver, unfortunately, a little even uglier. You've got a lower resistance area here that's appeared, 14.18. That's going to be a selling point now again. These things don't go in a straight line. You're going to have some volatility. Intermediate stops above 14.23, 24 on silver. That's kind of already been closed below and retested. So I think we're going to just continue to head lower here and actually settle below 14. Thanksgiving, a lot of my family is heavily involved in farming. I'm looking at soybeans right now, January beans. This is our daily. This is kind of interesting here. Talked about 872 new selling point. Now that really has been breached, been up to 877 or kind of spinning around. I actually think this is now time, since we've had a little bit of an event here, that we could go back up into 907 actually. So I'm looking for a retracement on our weekly for jam beans up into 907, 908. I like the way this is setting up here, kind of spinning around after we broke above profiles on the daily. But what are they, there's been so much rain here in North Carolina and in the South in general. There's a lot of things I want to tell you about harvesting beans right now, but if you get into over 8% of the amount of beans that's brought to the elevator damaged, so-called damaged or molded or whatever, then you're getting into a whole new class of payouts. And the guys at the elevator that are drying these things can kind of mix and match batches that are good and bad and keep it below 8% that gets sent to Cargill and all the other places. But that's a kind of a shell game that they play with the farmers and between the spreads of the Cargills of the world. But a lot of the beans are absolutely coming in right now. Thanksgiving is actually a big weekend here in this state for harvesting beans, and right now I think there's going to be a little bit of a scare from damage that people are kind of like, we might not need to sell this thing anymore because we could go back into $9. 907 is the target on this, and I think you can put stops below now 872. And I haven't been bullish on grains at all in a long time, and this is not getting super bullish. This is just a trading opportunity. And as we go into the scanner to look at that reflected, I'm going to go look at, there's my soybeans. There's that green shoot here on the daily, kind of breaking this long, look at that, 20 straight weeks by definition, even though we're within profiles on our soybean chart here. Let's just get back to that. There's 20 bars after we had that break above 980 on this contract. Sell resistance, sell resistance. I think we could explore this entire fair auction back into 907, and there's the 907 as you mouse over this. So it says price within the current task profile has been a downtrend for 20 bars. So in my opinion, you got a little bit of an opportunity. The stops below 872. There's that green shoot we were looking for on the daily, and we could retrace back up the entire fair auction into 907. The good news is it's a very high risk reward trade. You can put your stops tight. I wouldn't do that on beans. They're pretty volatile. But, if we get into the above 9, and usually, whole numbers are a big deal. They'll usually overshoot them a little bit. Anytime we get into the neighborhood of 907 on this trade, I think you got to be willing to, I just killed everything here. I think you got to be willing to take some weight off. Okay. All right. Let's take a look at a couple of ETFs. Let's look at the XLF. Pre-market looks like we're hitting 24.55. All right. So this is a long-term weekly. Mucho strong. You got that 24 area support now on this. Here's the daily. So 24 on the weekly and 23.99 on the daily. 23.98 on the weekly, 23.99 on the daily. Any type of pullbacks in there, you got to be pretty much backing up the truck with stops below. But you got to be buying breakouts again in case you're not already in this long above 24.77. Let's take a look at the XLY. Obviously, we've had a big reversal and got back above profiles here on our weekly, but I think this is going to be one where you're going to have to keep your eye on, and it might have some hard times ahead in general. 81.61 down into 80.60 is going to be a little bit of a collection area for this, in my opinion, for a little bit of more of a higher risk trade for this to start revisiting 79.43 and even lower. The broad market could drag this up, be aware of that, but consumer discretionary, I think, I don't know if the numbers are going to come out good fundamentally on this particular sector. Okay. We got about 20 seconds here before the next break. We're going to take a look at the Shanghai really quick. And we talked about the ultimate pullback area to buy this thing. These don't go in a straight line, but this 33.12, huge support. We've already met it and bounced up, and that's going to be a little bit supportive for the U.S. stock market in general, I think. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Someone's asking me about the DAX. Slow leak from this morning's high. Is that a trend? No. Yeah, I don't. Yeah, man. There's always a lot of points to be made, taking on a lot of risk, and this would be what I would consider taking on a lot of risk, is shorting the DAX right now. You got some devaluation in the currency. The DAX by default kind of revalues itself based on that. In my opinion, you've got some, just this U.S. index, the S&Ps are just sitting literally, in my opinion, on the launching pad. If I'm short, I'm terrified right now. I'm not short, but this thing start getting a little. If it starts getting a little steam moving forward, think how many people are going to have to start covering this. I mean, this is going to be a mass exodus of shorts. So, the DAX maybe, again, they kind of looked at each other and let me pull up the DAX here. These indices, especially, the U.S. doing well, these global indices start, getting euphoric. Oh, God, the U.S. economy is great and everybody's going to be buying everything. And, yeah, well, I don't think there's a lot of leverage here shorting the DAX. Yeah, I just think you need to stay away from something like that. Australian dollar. Okay. This is one we've been really talking about, the possibility of this reaching the 74.39.40 area. Still a big believer in that. 71.69, 71.70 stops below. I love how we closed above into this profile, went back and retested it. I'd like to see this thing get away from this area in general. But you've got some nice supportive situations, 71.69, 71.55 down in there. First stop now is going to be 72.62. but I actually think we could rise higher. You've got a really good risk-reward trade-on for this right now. Why are we thinking this? Just to review, divergence, long-term divergence in Navigator, and higher lows and lower lows in price action. So, again, this is something, might be able to pick up 200 pips, maybe more, 250 pips on this particular trade with a decent stop risk-reward scenario in place. Going back to the dollar, if you guys didn't catch the first part of the show when I was stuttering because of not enough coffee, we're at an inflection point on the dollar. This was our target, okay? This was our target from 96. As soon as we closed above, rattled around, got stopped out a little bit on this trade, but now we've reached our targets. So in my opinion, you should have some weight taken off of that long trade, and I am not a big fan of shorting this. So keeping some on and letting, this is our daily here on the dollar, in my opinion, still allowing some stops to be below 98.79, 98.80 on the long term. Remember, that's the bottom of our fair auction on our daily, and we're within profiles on our weekly. Just in case we do a pop here, not at all a bad idea to take everything off and wait for that breakout to buy. But again, I think this thing's spinning around here, not showing any type of reservations about being at a weekly unfair high after rallying from 96 is that would be super concerning if I was short. I think this thing's going to head higher, but we are at some major resistance right now on the dollar. Guys, you've been great. Thanks for joining us today. Stay tuned. Larry's next. We'll see you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.